This video, I'm going to explain to you what an order block is, and essentially how to find them on the charts. And then we'll go through some live examples and I'll show you how powerful they really can be when you understand the concept, even from a basic beginner standpoint. So essentially an order block, it's the same thing as a supply or demand zone. We also call them POI, which is short for points of interest, or OI, has areas of interest, but they will essentially mean the same thing. It's just different terminology. So, a bullish order block is the same thing as a demand zone, which is a long zone, and the bearish order block it's the same as a supply zone, which is a short zone. Order blocks are one of the most singular important concepts to understand when trading smart money concepts, or SMC, is essentially when large orders have been placed in the market, which costs millions and millions to move from the central banks and institutions. And you normally see price move away from an area on the charts, usually breaking structural levels, swing highs and swing lows, and more than likely changing the prevailing trend of the market. Now what happens? These leaves a big gap of imbalanced and inefficiency, which we will go into more depth on the future videos. Price generally has a very good reason to gravitate back towards this area, otherwise known as the order block or the supply or demand zone, to collect any remain orders, which may have been placed, still need to be placed, or have been missed after the impulsive move away from the area, and also to rewriting your price. So, let's jump into the charts now, and I'll go through some live examples and just give you really an insight to what an order block is, and how we can get away to finding them. So, let's get to it. Euro USD. I'm just going to use the 1 hour chart. Let's have a look. How we find an order block is we look for a break of structure. Here, we've got quite bearish momentum. We're breaking structure or swing lows. We're not really pulling back, but as you can say, we're slowing down and becoming quite corrective, which starts to tell me that we're basically losing momentum to the downside. Then what you will see from these 2 or 3 candles is break the swing high, cause this would have been the 1 hour swing low. Once we break that high with momentum and a candle, body close. This wick I would not class as a break of market structure, but because the following candle engulfed the wick and closed above it, and filled it with full body candle, then this will be classed as a break of market structure. In this case, we are looking for a bullish order block or a 1 hour demand zone. The way we find it is by tracking back, and we would look for the last sell or bearish candle before the bullish move that broke the swing market structure. So, if we track backwards, and let me just zoom in a little bit for you, you can see that this was the last sell candle before the bullish move, which broke market structure. Now, as I briefly explained to you, inefficiency and imbalance will be explained in more depth on the future videos. But essentially, imbalance and inefficient price action is when the market moves impulsively away, caused by macro data or volatility or news event, or just bullish or bearish momentum. You'll see gaps within the market like that. So, if we look at the bottom of this wick here to the top of the prior candle, there is a big clean gap, and this is where price has become unbalanced. And if you compare it to price actions, such as these candles here, you can see that the wicks and the candles all overlap each other. This is what we would call efficient price action. One thing to remember about imbalance or inefficiency is that price has to gravitate back towards it to rebalance price, and also to give everybody in the market an equal opportunity to get involved in buy or sell positions. Inefficiency or imbalance such as this gap here can be filled straight away. It can be filled next week. It can take a year, so we only use it as a guideline. But it is a very important concept for us to understand when trading SMC. For example, if you're looking for an order block, I personally will only be interested in a higher time frame or lower time frame order block. Like this example, we have some liquidity, which is also the same as imbalance, resting in above my area of interest or order block. That gives me confidence that price is going to revisit this area, like it has done here, collect the liquidity rebalance price, and then continue in the uptrend, which is in my direction bias. So, as you can see, I've got an order block here. We've got some inefficiency above it. I'm happy to set a risk entry. What we would do is we would set a pending buy order. We would set up pending order right at the top of the order block, and just stop loss could essentially be just underneath the order block. but it makes sense to just cover any potential wick where price may come back to test or to mitigate. As you can see here, we do have some imbalance and this has not been mitigated. So, I went with an 8 pip stop loss. As you can see, prices came down, it's rejected this area quite nicely. If we were to just target the swing highs, that would have been a 9 risk reward trade, and the trade duration was just in 24 hours, so this would be an intraday trade. We're at 9.5% in profit from identifying the block, following an uptrend and set in order. Regarding to the trade management, we're going to go into in other videos, but you could quite easily just manage your stop loss underneath these 1 hour pieces of structure. Moving on to this next example, we're making higher highs and we're making high low, and we are becoming quite corrective around here. This would give me a clue that we're possibly slowing down to the upside and maybe the bears are looking to get involved in the market. Now this would be our swing high, this would be our swing low, and I actually can see we impulsively break that swing low with a nice candle close below it. And we do leave some inefficiency just here. So, the same is what we do if we're looking for a bullish order block, and reverse for bearish order block. We would now be looking for the last bullish or buy candle before the break of market structure, so that candle would be this candle right here. So again, we've got some inefficiency, there's some liquidity restroom just below my order. I am looking to short this, and we've also broke another level of market structure. So if you do see this, you could be thinking, well, why haven't I chosen this one? It's got to make sense in the sense that the order block that you choose has got to have some liquidity below it. It has to have some maybe retail confluence to what price may turns that level or some inefficiently. Now, there's nothing wrong with setting an order here. But for me, this would be lower probability as we do have this gap of inefficiency to fill, and the market would need in my eyes a bit more of an exhaustion or a pullback before we continue, if we are going to continue with the downtrend. So, I set my order again at the base of this order block. Stop loss on this one was 12 pips. Again, price broke a level of structure down here, which again shows me that on the 1 hour we are still bearish. So, the market is telling me that we are looking to continue moving to the downside. So that gives me a more confidence that we're looking to go short on this pair. You can target the wick. I personally prefer to target the top or the bottom of the actual candle bodies. So again, you can trail your stop loss, especially if it's a higher time frame trade idea. But again, this is just an example of the quick percentages you can make just from setting risk entries at these valuable areas. An order block. So, this was a 1 to 5. So, just over 5%. And again, this trade was just under 24 hours. Remember, the trend is your friends. So whenever possible, with the high time frame trend or at the very minimum, we have the 1 hour trend. Again, the same concept guys. We've got a break of market structure, so the market is continuing to push to the downside. Now we look for the last buy candle before the sell. Now you could have chose this order block and it would have had a reaction. As you can see, we broke structure. We've come back. We've reacted to this order book here. And I mean, you probably would have taken a break even, and they see if you put your stop loss to entry at 1 to 2. But for me personally, the order block has to make sense. So, price action is quite efficient. There's no liquidity, there's no real inefficiency or imbalanced. So, it makes no sense to have this as my order block. There's nothing wrong if you would choose this order block. But when we have the origin of the mood, we would call this our extreme order block, and it's the last or the first buy before the bearish momentum kicked in on the 4 hour time frame. This would be 2 very bearish, large candles. So we also have some liquidity resting below and a doji up here. A doji candle, from my experience, are higher probability order blocks. If we see a doji as an order block, then they do tend to be quite high probability and work and play. We also do have retail confluence here. We have ascending continuation channel. So again, this is another confluence to this going short. Price possibly break structure and correctively move back towards my order block. We fill the last bit of inefficiency on the pair and we tap into the other block. We are tapped into the position. I would have had a pending sell limit order on this, at the base of the order, with my stop loss just above the highs in the doji, 11 pips. And you could have trailed your stop loss. There's no obvious target, and you could have set your TP at the base of this, or you could have trailed your stop loss. Trailing your stop loss when you're in a high time frame trade. If the daily is bullish and the weekly is bullish and the 4 hours bullish and you're entering on the 1 hour or the 15 minute, then it makes no sense to manage your trades on a lower time frame. I would suggest trailing your stop loss and managing behind 1 hour structural level. In this case here, let's just do this. So, once we break this swing low here, I would take my stop loss just above this high. I want to break this low. I would trail my stop loss behind this swing high. Once you break this low down here, I would trail it just to be fair, as we're starting to become a little bit more corrective and less impulsive compared to this price action and this price action. I would be a little bit more aggressive. When we break this low here, I would put my stop loss just above this high. When we break this low here, I would manage my stop loss just above this high here. So, this trade would have closed for 16%. Now it would be a slightly longer hold. So, you would have to hold this overnight. If it's a week where we are quite news quiet, then you could quite easily have held this trade for 6 days and it would have made your month. So, I just wanted to really give you the basics of order blocks, how we can find them on the charts and how powerful it can be, even when using a beginning entry method, using this entry model, which is a risk entry and trading with the 1 hour trend. Anyway, hope you enjoyed the video. Any questions, please feel free to drop a comment below.